Hi, it's Josh Wilson with Josh Wilson CPA. And a lot of times this time of the year during tax season, I get asked by clients, where is my profit gone to? Because most everybody only looks at just the income statement. They don't look at their balance sheet and know exactly, well, where's their money at? And a good report to pull up is in QuickBooks, and you can see from one year to the next year where exactly that profit went to. So this example that I'm about to give you is a client that has $50,000 of net income but little cash in the bank. So they're wanting to know, well, where all of this $50,000 go to. So a report which you would go to is go up to Reports, Company and Financial, Balance Sheet Standard, come over to Customize Report. This client's a cash basis taxpayer. Select Previous Year and Change. That'll show you from one year to the next what happened. We want 2011, so we select 2011. Tell it OK. And so now we've got our balance sheet showing exactly what happened from 2010 to 2011. And just as I said in the example, this is a client that has a $50,000 net income, and they want to know exactly, well, where did this money go to? And all they're doing is just looking at their P&L, and they just see, $50,000. So you pull up this report, you see that cash went down by $35,000 at the end of 2010. They had $43,000 in cash in the end of 2011. They had $8,000 in cash, but had $50,000 of profit. That's where the confusion comes in. So if you go down this report, you can see that they purchased $20,000 of equipment, $25,000 of equipment. They got $20,000 of machinery and equipment, and $5,000 of computer equipment. Well, this is not really the factor because it's being offset by depreciation, so it's kind of washing out. But they collected $500 of their employee receivables. They took it out of their pay. Here's where the bigger picture is coming in. When we looked at their liabilities, at the end of 2010, they had $17,000 in credit card debt. Well, they took my advice and wanted to get out of debt, and they paid off their credit card debt. So they're at zero debt for 2011. The payroll liabilities at the end of the year were $1,500, and then at the end of the year before, 2010, they had a bank line of credit of $50,000. Well, they took $45,000 and paid cash, and brought it down to $5,000. So they did really good knocking out debt in 2011. So if you look at all this change over here, they had $50,000 of profit. Well, they paid down a lot of debt. That's where it went. Plus, they paid themselves a little bit, took out a little bit of distributions. So when we net down, we get down to seeing that their cash dropped by $30,000. And why? They paid off debt. So if you ever want to look and find out exactly, well, if I've got this income, well, where did it go to? Pull up this balance sheet report, and it'll help you out.